All right, guys, I know I've been talking a lot about finance, like personal finance and things like that lately. And this last few weeks is a perfect example of why you want to be financially fit, have your money in the right places, not owe, a bunch of debts, have a lot of extra money at the end of the month, right? I'm going to say that over and over and over and over. Most people have too much month at the end of the money. You need to have a lot of money at the end of the month. And it's perfectly the scenario to take advantage of that right now. So with this whole COVID-19 thing, which is extremely sad and devastating in so many ways, believe me, I'm a healthcare worker. I work with facilities across the country, and I've seen the devastation that it's caused. And so thoughts and prayers go out to anyone affected by that. And I hope it ends soon, but I don't see that happening. But this video, personal finance, your personal finance. So I have been buying up as much stock as I possibly can over the last couple weeks, and I anticipate it will kind of bounce up and down, but low compared to the former high of any given index, like whether you're looking at the S&P 500 or the Dow or even just individual stocks. They hit a high about a month ago, and now they are very low. In fact, some of the lows are the same price as 2-3 years ago. We're going that far back in how far the price has dipped. It won't stay down there. In fact, typically when we have a big sharp decline like this, you never know how long it's going to stay down, but then we typically have a pretty sharp incline, and we of course go to a new high. So if you have your money straight, you can adjust the things that you're putting your money into. See, so I have a small trickle going to an emergency fund every month, but I'm going to stop that for the foreseeable, I don't know, next handful of weeks or even a few months. I'm going to stop that, and I'm going to divert it to stock market purchases. Now, I always buy stocks. I have a standing transfer of a small amount into my stock market account every week. But I'm going to add to that from my emergency fund weekly transactions. They're going to shift that way. I'm going to tighten up certain budgets in other areas and shift them that way. I'm going to shift my travel fund. I have a fund where I put weekly deposits into a bank account for travel money. That's all going to be shifted. Everything that is kind of extra money is going to be shifted to my stock market account so that I can increase that while the prices are low. So I'm going to show you here, I'll show you my computer screen and show you kind of the charts and why that matters and how this works. But as you buy lower, so if you're buying every week, like I suggest you do for basically your whole life, your average purchase price goes up, but the entire market is going up too. And so you're just purchasing, stocks weekly, and it increases over time, and you still gain a certain average, right? The average gain of like the S&P 500 somewhere like 10%. So you're getting a 10% gain on your money over time. But when these big dips happen and you buy as it drops, you are lowering your average purchase price. But as it makes that recovery here in the next 6 months, year, maybe 2 years, who knows? Hard to say. It typically will be a steeper recovery than the typical growth. And so you're going to have a cheaper average purchase price, and you'll get back up to that really high, new high, much quicker. So this is where you take advantage of opportunity by having your finances right. The crazy thing is like we haven't had very many of these, well, nothing this big since 2008, 2009. We've had some small versions of this over time, over the last 10 years, but in 10 years we haven't had anything like this. So like this is the one exciting place of this crisis that we're in, is that we get to buy stocks on sale and make a lot of money. Other things too, like I'm not a pro in all markets, but those who had money during the housing crisis of 2008, bought real estate and land and houses and things like that for dirt cheap and made millions in the following years. This is an example in the stock market. You can purchase things on extreme sale. So like Microsoft is still a very good company, but they've been affected by the results, especially their stock price has been affected by this. So it's going to drop and you can purchase and it will still be an extremely solid company in a year from now. So it's a good time to buy. Microsoft, by the way, is kind of my number one stock as of late. But there's many ways to approach the stock market. If you want to do it the safe way, you buy into something like that follows the S&P 500. So you have a diversified fund without having to work on your, personally diversifying it. So let's take a look at the S&P 500 right now. Here's an example of the S&P 500. This is a 10-year chart. So as you can see, if you would have entered sometime in 2000, let's go 20 years actually. So there's been some ups and downs, but in the end, it averages up. The S&P 500 basically has always been averaging up. This is the Great Recession of 2008. And then we have this recovery, right? So I'm always talking about getting yourself financially fit so that you can take advantage of the downturns, right? People that are not financially fit are just absolutely desperate right now. People who are financially fit are having a heyday. Like this is gold, right? So if you've just been buying, you gain the average. Well, there's certain times that don't happen very often, but when they happen, if you're ready, you can take advantage. So if you've just been buying all, let's just say you buy the S&P 500 every week, every year, basically 52 times a year, you put a purchase in and buy a piece of this, right? Well, your average purchase price goes up, but you're also gaining, right, over time. But then there's these moments like about a year ago where we had this kind of mini recession. And if you're buying, well, now your average purchase price is down here, even though it's going to make this quick recovery up all the way up and then continue up to here, right? So you basically purchased stock at the same price as 1 year prior. And here we are again. We have this COVID-19 crisis. The world is experiencing a health/economic crisis going on. So you're just buy. You're still buying, right? If you're buying today, you're basically purchasing stock at the same price as in the 2018, mild recession, and at the same price as in 2017. So you're basically getting it on sale. You're getting the chance to go back 2 years, buy at that price from 2 years ago. And if this is, anything like history, it's going to just shoot back up and go higher. So this is where you can capitalize on making a lot of money real quick. But remember, in the stock market, you don't want to ever make yourself desperate so you feel that urgency to sell. So only buy with money that you can, but that's the importance of getting yourself financially fit before this opportunity happens, right? So if you've been following my program and working a budget and saving money and you have your emergency fund and all those things, well, now's the time to kind of tweak some of those places that you're sending money and put all available extra cash right here in the stock market. You just buy as it falls. It might fall farther. I don't know. For my sake, I hope, right? For those that are trying to retire, I hope not. But you want to buy all the way down, and then as it starts going up, you basically, like, what if it falls a little farther and we get to purchase, like, look at that. Like, if we got to purchase, like, right there. We're going back to 2016 when it kind of had a little dip. Boom, we're purchasing at that same price, which it shows where's my price? Right up here, it shows the closing price, right? So if we're on this, closes at 24.47, but if we compare that to right here, 32.25. So you get to go back and do that. All right, guys. Thanks for watching. Appreciate you tuning in. Always appreciate you sharing, liking, subscriptions, of course. I hope to build this group up and have a nice interactive group here on this channel, and provide feedback and updates on how you can continually improve your financial situation, as well as other leadership and personal development qualities. So thanks for showing up, and we'll see you on the next one.